Hi everyone, healthbeing.com. In today's video, I'm going to do a basic introduction on candlesticks. As usual, before we proceed, please read through this disclaimer. Do take note that the information or opinions provided in this video do not constitute any investment advices or recommendation. You may pause the video if you need more time to read. Let's look at the candles. So do you know that candlesticks can be used in any time frame, be it daily chart, hourly chart, or minute chart? They are used to describe the price action during the given time frame or the session. So as you can see here, a candle is usually formed by four prices: the high price, close price, opening price, and the low price. So if the close price is above the open price, then hollow or white candles will be formed. Whereas if the close price is below the opening price, then the field of black candles is drawn. As you can see here, the hollow or filled section of the candlesticks is called real body. So that means that the price range between close price and opening price is called real body. There are two thin lines extended above and below the real body is called shadows. So the top of the upper shadow is the high price, and the bottom of the lower shadow is the low price. Next, let's look at some characteristic of candlesticks. So you can see here, on your left will be long candles, whereas on your right is short candles. So what does that mean? If a long white or hollow candlesticks is formed, it's usually shown the strong buying pressure. So the longer the candlesticks, the further the close price is above the opening price. So this indicates that the price increased considerably from open to close, which means buyer were aggressive. Whereas if field or black candles, long field or black candles is formed, then the close price is further down from the opening price. This indicates that price fell from a great deal from the open, and which means sellers were aggressive compared to short candles. The next one will be long shadow. What does long shadows means or signals can we get from these candles? So if candles with long upper shadows and lower shadows, which shown on the candles on the left, this means that buyers try to dominate the session. However, sellers came in and drove back the price down to near to its opening price at the end of the session. On the other hand, if a short upper shadow and a long lower shadow is formed, it means that seller attempt to force the price lower. However, buyer came in and drove back the price up near the end of the session back to its opening price. We'll be looking into some candlesticks pattern. First one is spinning top. So spinning top, you can see here, is formed with a long upper shadow and a long lower shadow with a really small real body. So this is spinning top. So the color of the body not really that important. So this pattern indicates that indecision between buyers and sellers. Then do you remember the characteristic on the first few slides we mentioned about some characteristic? Compare long bodies to short body. So these small real bodies show that little movement from opening price to the closing price, and the shadow indicates that both buyer and seller were fighting during the session, but nobody wins the session. So even though the session open and close with a little change, then the prices move significantly higher and lower in the meantime. So the second type will be shaven head and bottom. So a bullish shaven head and bottom contain a long white or hollow body with no shadow, which means the opening price will be the low price and the close price will be the high price. This is a very bullish candles, and it shows that buyers were in control the entire session. And this we usually see these candles in the first parts of a bullish continuation or a bullish reversal pattern, whereas a long black or filled body with no shadow, this is bearish shaven head and bottom. It is a very bearish candle, and it shows that sellers control the price action throughout the entire session. And likewise, it usually implies bearish continuation or bearish reversal. The third pattern will be doji. So doji candlesticks have the same. The characteristic is yes, usually has the same opening and closing price, or at least a very small real body. In other words, doji should have a very small body that appears as a thin line. It suggests that indecision of gaining position between buyers and seller. Price may move above and below the opening price during the session, but close at very near to the opening price at the end of the session. Hence, neither buyer nor seller were able to control the session. So for doji, when doji is formed, we might want to pay special attention, because if a doji is formed after a series of candlesticks with long hollow or white body, so this signal that buyers are becoming weaker or exhausted. Whereas if doji is formed after a series of candlesticks with long black or filled body, this implies that sellers are becoming exhausted or weak. Hence, it might signal that there could be a reversal. Thank you for watching this video. Hopefully by now you will know how to recognize different types of candlesticks pattern and able to apply it to your charting. We have another videos on patterns, more patterns on a reversal pattern of candlesticks. You might want to watch it as well. Remember to subscribe to our channel and get more updates. Don't forget to like our Facebook page and visit our website at wellbeing.com. Thank you.